Everybody, welcome. Thank you for joining us at the 5 issues for preventing profit for law firms. So I'm going to be introducing our keynote speaker here in just a second. I just want to do a very brief introduction and let you know why this webinar is going to be important to you as a law firm owner. The things that Ryan is going to go over on this presentation is going to help you with profitability, whether you even increase revenue. So there's a lot of interesting tidbits in here. So whether you're growing or you're staying the same, using some of these tactics are things that are going to help you increase revenue. Ryan is the owner of Financial Clarity, and he's going to be with us today going through a presentation. Before we get started, Ryan, I just ask you, what does a CFO like yourself do for your clients?
Sure, Eric, that's a great question. So a lot of people, think about a CFO, the first thing they jump to is, big company, right? Google, Apple, those are the kind of companies that have CFOs. But in reality, a CFO's job is really to track profit and cash flow and kind of analyze the strengths and weaknesses of a business from a financial perspective, and then go and propose corrective actions that make the company better. So even small companies can really benefit from having a CFO.
And you've worked with professional services like law firms in the past and kind of a niche for you, right?
Absolutely. Yeah. In the last little over 6 years, I've worked with a little over 200 law firms. So it is definitely, a specialty of mine. I know, the operations of law firms and we work really well together and I really enjoy it. I really enjoy working with law firms.
Great. All right. So without further ado, we'll jump right into it. I'm going to close out my camera, mute myself, and hand you the stage.
That sounds great. Well, I appreciate the introduction, and it is great to be here today. Great to be, with all of you and presenting. So I'm going to share my screen here, and we're going to get started. So how to improve the profit or revenue and profit in your business without the stress and overwhelm. So today, I'm going to be covering 5 big challenges facing 90% of all small businesses, not just law firms, but all small businesses. Why profit is more important than sales and why cash is more important than profit. 4 key steps to go from feeling overwhelmed and stressed about cash and wondering, where did all the money go, to feeling confident and knowing that you're running your business like a CEO with the numbers driving your decision-making. That's really what we help the firms that we're helping do is, know their numbers so that they can drive decision-making, which results in more revenue, more profit, more take-home pay. So presented by Eric covered some of this a little bit. I'm Ryan Kimler. I'm the owner of Financial Clarity. I have a background in accounting and finance. I have degrees in both accounting and finance. I'm one of 14 nationally recognized certified CFOs by the CFO Project. It's a very extensive training program. I think it took me about 12 or 13 weeks to complete. And here are the founders of the CFO Project. These are Jeff and Adam. They're both mentors of mine. They're former accountants turned business owners. They developed a proven process to help business owners make more money in less time with less stress. And they put together a team of CFOs like myself to help clients make more money and become a better business owner and own a better business. And they call it the CFO Project. So 5 challenges facing 90% of small businesses. So challenge number 1 is the business relies on the owner or it falls apart. For those of you that are out there that haven't taken a vacation in a couple of years, this is probably a challenge that you're facing. Probably, you've got to have your hand in all the processes and providing direction, or your business doesn't run. I like to ask business owners when we start working together, what would it look like if you had to take a week away from your business? How would your business be doing? So those are good questions to ask yourself. Challenge number 2 is the business owner is constantly battling a catch-22 situation. I talk to a lot of law firm owners that they're wanting to grow, they're wanting to add more staff, paralegals and office assistants and other attorneys. And the problem is that they don't have the money to go out and do that. Well, how do you get more money? You got to go generate more sales. Well, then when you generate more sales and you generate more cases, then a lot of times they don't have the capacity to handle that volume. So they're always battling that situation of, well, if I go get more cases, I don't have enough volume. But if I don't go get more cases, I don't have the money to hire the people that I want to handle the volume that I want to have. So they're always battling what I call like a catch-22 situation. Challenge number 3 is oftentimes law firm owners don't have a simple way to understand what's working and what's not in their business. Kind of like a scoreboard. That's what we help our law firm owners with, is we provide them a scoreboard, usually around 9 or 10 simple, important metrics and numbers that really help them determine, here's where I'm winning and here's where I'm meeting my goals, and here's where I'm falling short, and what are the changes that I need to make in order to make it to where I'm meeting my goals. And we're going to talk about that as this presentation continues. Challenge number 4 is the business owner does not have clear goals. And when I say that, what I really mean is it's not just about a revenue goal. I talk to a lot of law firm owners, and they're, like I asked them, what are your goals? And usually their first answer is they give me a sales number, right? I want to have $500,000 in revenue next year, or, I want to do $600,000, or sometimes I get that number in cases. I want to close 150 cases next year, right? But it goes beyond that, right? It's not just about, well, how much you want to do, in revenue in your business, $500,000. Okay, great. But how much are you actually making? How much are you actually keeping? Those are the kind of goals that I'm talking about having set that most business owners don't have. And it's not clear, if I make $500,000 next year, I can expect to keep $50,000, or I can expect to keep $100,000. Those are the kind of things that most business owners don't have put together that we help them with. And then challenge number 5 is not having a clear path to follow to having a growing, more profitable business. If you ever wake up in the middle of the night, it's probably not related to, man, I wish I had better accounting, or man, I wish I knew my numbers. It's probably related to, what do I got to do next? What's the next step that I need to follow in order to meet my goals? Me being a business owner myself, I have the same thing, right? I'm not worried about, is all my accounting, is all my trust accounts in order? It's all about, what do I got to go do next? And that's what a CFO really helps a business owner do, is have those steps lined out to where they know what they have to go do next, or what they have to go change in their business to turn a weakness into a strength. So 4 steps to improve revenue and profit in your business. Step number 1 is generate more cash than you spend. That might sound really easy, but it's not always easy. But as I was saying before, it's not what you make, it's what you keep that really matters. Every business owner has to focus on generating more cash from their business, not revenue and not profit. There are companies out there like Uber and Amazon and those bigger kinds of companies. Tesla would be another one, that they haven't turned a profit in years, right? But they have stayed in business because they've continued to generate cash from their business. So cash is the most important thing. You generate more cash by ensuring that how much is flowing in, or cash is flowing in your business faster than it's flowing out. This can be a real challenge for a lot of the attorneys that I initially talk with, especially when it comes to like collections and getting, your cases that you've closed collected on, and what are the processes for that, so that you don't have people that owe you money from a case that you closed 60 or 90 days ago. So it's important to have cash flowing in the business faster than it's flowing out. And a traditional income statement that you would get from your accountant has sales, minus expenses, and that equals your profit, but that doesn't tell the whole entire story. Once you make a profit, you still have to pay taxes out of that profit. You have to account for any uncollected revenue, as I was just talking about a minute ago. And you have to account for any owner withdrawals. If you're paying yourself through a distribution or a draw, that's not going to be included in your income statement. If you're paying down any debt, especially, for everybody recently. I know a lot of law firm owners took out a PPP loan. Most of the time, those have been forgiven, but I also know a lot of law firm owners took out like the economic disaster relief loans from the Small Business Administration, and paying down that debt does not show up on your profit and loss statement. Interest does, but paying down the principal of debt doesn't show up and doesn't come out of your profit. So if you're paying down a loan and it's like, let's say you had a net profit of $10,000 and you paid $5,000 down on a loan, you really are only going to end up with like $5,000 of cash in the bank because you had to pay down that loan. Buying assets. Usually this comes along when you've got to go out and buy like a new computer for your law firm, or maybe it's multiple computers for your staff. Those kind of things are put on your balance sheet as an asset, and you don't get to expense the entire cost right away. That's really because of IRS rules, and they want to collect taxes as soon as they can, basically. So all those things I just listed, they take cash. So it doesn't matter, how much you make, sales or profit. It matters how much are you keeping cash. And 98% of the attorneys that I talk to, they do not have a goal around how much money they want to keep, how much cash they want to put in their business. How much cash do they want to have for a reserve? 99% of the attorneys that I talk to, or 98%, do not have those types of goals and do not have a grasp on those types of numbers. And that's where our firm, really helps, set a goal for that and make it reasonable, and help you grow that number, so that you can, put a little money aside for like a rainy day fund, is what I call it. So again, every business owner must focus on generating more cash from their business, not revenue, not profit. So all the answers are in your numbers, and yet most business owners aren't looking at the right numbers. You probably have an accountant or a bookkeeper, but they're paid to tell you what happened in the past and file your taxes. They're really there more for compliance, right? To keep you out of trouble with the IRS, to keep you paying, your quarterly income taxes. They're not really equipped to, provide you with a scoreboard and help you determine where you're winning or where you're losing. They're not really equipped to help you, like it says there, find the numbers that drive profit or tell you what to do to move the needle. That's really what a CFO does, is helps you find the levers that, hey, I'm not meeting my target here. I'm not meeting my goal here. What's the lever that I need to go and pull to really make a change in that in the next 30 days? And that's really what we help you do. So you need to focus on just a few key numbers, and then you'll start to understand which numbers are preventing profit and cash leaks the most. So those are usually what I call the drivers. And like I said, we really try and narrow it down to about 9 or 10 drivers that really are holding your business back the most. Not all of the key numbers to pay attention to are in your financial reports, and that's also what makes them confusing. So I've got 15 drivers that I'm going to cover here. The first 5 cover revenue. So you have 5 revenue drivers. The first one is leads. So obviously that would be, people that join your email list, or people that, watch a video that you've put out and they start following your website and things like that. And they find a way into your like CRM system. The second one is, what's your conversion rate on those leads? So how many of those are booking a consultation with you? How many of those are, becoming a new case? Your conversion rate on leads that come in your door and have a consultation might be 80, 85, 90%. I mean, it really just depends on your law firm and your sales. Your retention rate, how many customers are, coming back for additional purchases? So, if you're an estate planning attorney, how many of your estate plans come back to you every few years, maybe to make changes to their estate? That's an example of, how high is that retention rate? Purchase frequency, kind of along the same lines. How often are your customers buying from you? And then number 5 is the average purchase value. This is really like, what's your average invoice amount that you're sending out to your client? So here I've got some definitions here that I kind of covered. Leads is the number of individuals who are a right fit for the business. They've been made aware of the business through marketing efforts and have indicated that they may be interested in purchasing. Conversion rate is the percent of those leads that the business has been able to convert to a closed sale. These are the people that become a new case for you. Your retention rate is the percent of all past customers that the business has been able to retain. And it could be this year, it could also be, many years down the road. Cumulative, the goal is to get any customers who have purchased from you in prior years to come back. And recurring is the goal is to get the same customers to come back month after month after month. Most attorneys don't have a recurring type of goal. It's more cumulative. It's more year over year than it is month over month. Purchase frequency, the number of times a customer purchases this year, regardless if they're new or retained. So if you're working with a client on a case and, on average, you're sending them 6 or 7 invoices, then your purchase frequency is probably, 6 or 7. Average purchase value, this is the amount of each purchase. So this is the average value of your invoices. So those 5 things add up to what your revenue is. So if you take your purchase frequency rate, or basically the number of invoices that you issued, times your average purchase value, which is your dollar amount on your invoices, you're really going to get to your revenue. So then I've got 5 profit drivers. Most of these you're probably going to be familiar with. Number 1 is revenue, sales. Everybody's familiar with that. Cost of sales as a percent of revenue. So this one is really interesting. Most attorneys and law firms don't really think that they have cost of sales, but actually there are a couple categories that I like to put in cost of sales that can really bring some insight to your income statement. One of those is hiring outside attorneys. So if you hire attorneys on a contract basis, like a 1099 basis, to help with cases that you have, that is a direct cost to the revenue that you get on that case. Another one would be pay-per-click advertising costs. So if you're advertising through Google AdWords, or most of you probably are not advertising on Facebook, but so mostly, Google AdWords, that would also be a direct cost associated with obtaining another case. The third one, I like to batch payroll expenses together. Fourth one, I like to look at marketing expenses as a percentage of revenue. And then the 5th one is all other overhead, for your office supplies, computers, all that kind of stuff. So revenue is the amount of sales the business is able to generate through the 5 revenue drivers that I covered. Cost of sales, direct cost that the business incurs when they make a sale. So if you are taking on a case and you know that you're going to have to hire a contract attorney, that's a direct cost to that case. And it's always tracked as a percent of revenue. Payroll expenses are the amount of expenses related to paying employees and contractors that are not included in cost of sales. You can't book them in both. Marketing expenses are needed to generate revenue. This driver is defined as a percent of revenue. And then overhead expenses, the amount of all other operational expenses incurred in the business. And those 5 drivers will make up what your net income or profit is for the business. Cash flow drivers. I've got 5 of these as well. Increase or decrease in accounts receivable. So this is the amount of money that your customers owe you. Increase or decrease in inventory. Really doesn't apply to attorneys and law firms. Purchase or sale of assets. So that's where I was talking earlier. If you go out and you've got to buy a bunch of computers for your company, that would be a purchase of an asset. Increase or decrease in debt. Just as we were talking about before, if you take on any loans for your business. And then finally, investment or withdrawal from the owner. So those 5 really make up your cash flow drivers. So as I said, this accounts receivable is the amount owed to the business from their customers. So if a customer owes the business, meaning you have an invoice outstanding, let's say it's for $5,000, the amount of cash available for the business is short that $5,000. When a customer pays what they owe, you bring in that $5,000. So cash goes up. Inventory, I'm going to kind of skip over this just because, inventory is not really relevant. So when you buy an asset, when you go out and purchase a computer, cash in your business goes down. If you sell an asset, like let's say you sell an old computer, the cash that you have in your business is going to go up. You're receiving money for that sale. Debt. So when you're paying down debt, your cash is going down. And that is money that's coming out of the business, and that is after your net profit line. If the business uses debt and you take on a new loan, then your available cash is going up. So if like I said, if you took on like a small business loan, that's going to bring cash into the business. And then owner with investment or withdrawal. This could also be distributions if you're a part of a partnership. Or S Corp. If you withdraw cash, available cash in the business is going down. If you invest cash, obviously available cash is in the bank is going to go up. So those are the 5 cash flow drivers that most attorneys and law firms that I start working with don't necessarily have like a great tracker on, or don't have a great handle on right away. That really improves over the course of us working together, and their understanding of how do I get to my ending cash flow? Did I end the month with more cash or less cash than when I started? That tracking and the understanding of how we get there really gets better for the firms that we work with over the period of time that we work with them. So step number 2 is to create targets for profit and cash flow. So according to the SBA, 50% of all businesses never see their 5th birthday. And it all boils down to that they ran out of cash. So I believe that the number is probably higher than that. It's probably higher than 50%. But yeah, that's what the SBA number officially is. So there's a predictable way to prevent failure. In the first step, we know, so now that we know, how to make cash flow and what, the drivers that make that up, we know to put that as your number 1 focus, not sales and not profit. We also know which of the numbers to focus on, and that's the 15 drivers. So in this step, we're going to set targets for the next year using those 15 drivers. So this is kind of what I talked about before, where it's not just, do you have a goal for revenue? It's, do you have a goal for the drivers that are going to get to your ending profit? And do you have a goal for the drivers that are going to get you to your ending cash flow? So how to set targets. Step 1 is to find out what you did last year for each of the 15 drivers. You should be able to get that from your bookkeeper or accountant, possibly even your tax preparer. You're looking at historicals. Step 2 is then you want to create realistic targets for this year for each of the 15 drivers. Realistic targets is really important there. If I'm working with a business owner and they tell me, well, we're going to 10x our revenue this year, that's probably not a realistic target unless they've got some systems in place that they're really ready to ramp up that fast and take on that revenue. I mean, it's possible, but for the most part, that's probably not a realistic target. So step 3 is to add up the 15 driver targets and come up with your profit and cash flow target for the year. And then step 4 is to ask yourself, do I like that target? That step is the most important one. So I've been going, I've had it happen before where I've been going through the 15 drivers with a client, with the law firm owner, and we get down to the end and we find out, well, this is what your profit is going to end up being if you hit all your targets. And this is what your cash flow is going to end up being if you hit all your targets. And I'll ask them, are you happy with that target? Does that really give you the lifestyle that you want to have? And I've had attorneys answer me, no, I'm not happy with that target. And then sometimes we've started all over completely at the beginning, going through and doing the whole process over and creating new targets that they're actually happy with. So that step is really important. I really can't stress it enough, because when you're setting targets, you're kind of like giving yourself, like if you were driving a car or a boat or something like that, like you're giving yourself a heading, you're giving yourself a direction to go. And that's what you're going towards, is your targets. So if so, great. And if not, then determine which of the 15 drivers have to change. Sometimes, we get down to the end and I've got attorneys that say, no, I'm not really happy with that target. And we go back and we tweak a couple numbers, we tweak a couple of the drivers, and then we get them to a number that they're really happy with, all their targets. So I've got a driver worksheet that we'll give away. We'll make sure that everybody gets as a free giveaway. But it basically covers the 5 drivers. Revenue driver 1, as I covered, leads times conversion rate, and then you've got your total past customers times your retention rate, which is driver number 3, purchase frequency rate, driver number 4, and then purchase value is driver number 5. And then here I've got profit driver. There's a sheet that covers profit drivers as well. These are ones that most attorneys are much more familiar with, but I've covered in this presentation as well. Profit driver 1 and 2 there, revenue and cost of sales. And then 3, 4, and 5 are your payroll expenses, your marketing expenses, your overhead expenses. And when you get done with all of those drivers, you get down to your net profit. And then cash flow drivers: increase, decrease in accounts receivable, increase, decrease in inventory balance, purchase or sale of assets, pay down or taking on new debt. And then finally, owner investment. And when you get down to the end of that, that gets you your total cash flow for the year. So step 3 is to keep score. You can't win the game if you don't know the score. You have to stop manage your business by the seat of the pants and start managing by the numbers. As long as your decisions are based only on intuition, then you're the bottleneck. And you can never have freedom in your business. Numbers don't lie, and managing your business by the numbers and heading towards the targets that you set are going to get you to where you want to be. So the key is to build a scoreboard that tells you which levers to pull to increase profit and cash flow. That's what I, as a CFO, help a lot of our clients do. So a scoreboard allows you to quickly and easily see how well you're doing in your business and what's preventing you from hitting your targets. Basically, it shows you what areas or what numbers are really lagging behind and where you're not meeting your goal. So a scoreboard also gives you an early warning system when things are going south, so you can fix it quickly, which means there are no surprises. A scoreboard allows you to be the owner and the leader, and instead of being an employee in your own business. So the right scoreboard will suddenly free you up from worrying if it's all going to work out this month and worrying if you have enough cash for this month, to knowing exactly where you stand day by day, week by week. And the key is to build a scoreboard around the 15 drivers and forecast where you think you'll end up by the end of the year. So in this example, I had a client that set a target of 100 leads. We forecasted that they're going to have 125. So in that case, their scoreboard for that number, for that driver, would be green. They're going to meet their target if they're going to have 125 when they only targeted 100. Now, if their forecast was they're only going to get to 90 leads when they targeted 100, that's obviously they're falling short of their goal, but it might not be so short that they can't hit the majority of their other goals. That might not be the most important thing. So it might be colored like a yellow. And then finally, if you're really short, and that's going to be the bottleneck in your business, and that's going to hold back revenue, then you might be forecasting only 50 leads and your target is 100, then maybe that's the most important thing that needs to be fixed. And in that case, it would be colored like a red color. So then step 4 is to create an action plan. So there are thousands of businesses out there. There are thousands of law firms out there that are stuck, and they can't grow because they don't have the cash to reinvest in growth. They also don't have a clear path forward to know what they're growing towards. They don't have the cash to hire more people, increase marketing, buy adequate inventory, or buy adequate equipment. So the owner simply gets stuck, and a lot of times they end up working harder and harder in their business. The owner is stuck working too hard because they know that there's a problem, but they don't know how to fix it. If you want to break through to the next level, you need a plan of the most important steps that need to be done this month to move your profit and cash flow needle closer to your target for the year. So this is an example, like action plan that we typically use with our clients. In the first column here, we set objectives. So we look at the scoreboard, we look at the items that are in red, and we look at the overall objective that needs to be set to really pull the lever and change the scoreboard from red to green. So an example here would be like increase total sales transactions from 18 per month to 23 per month. That would be an example. That's an overall objective. After that, we meet with the business owner and we help them set next steps. So maybe in order to achieve that goal of having more sales transactions, maybe they need to improve their conversion rate. Maybe they need to increase their leads. So we go over those next steps when we meet with our clients, and we help them develop a plan so that they know exactly what to do next to hit their overall objective. And then we assign an owner. I see a lot of times in a small law firm that the attorney themselves that owns the business is not always the person that's responsible. That it's oftentimes other people that are crucial to doing the next steps to change the objective. So we help them identify who's the person that's really responsible for achieving this objective. And we'll put that there in a column. And then finally, when do they have to have it done by? What is the due date? How urgent is it for them to make these changes? And then any notes, that we might have can be included there as well. So we have this one clear path, and this is what we use with the firms that we work with, that I've kind of covered here today, that can help your law firm grow on a predictable, basis, and it gives you one direction forward. This is the exact system that we've used, that we help the law firm change the number of months of expenses of cash in their bank from 3 to 13 in 6 months. So annually, we're going to set targets in step 1. On a monthly basis, you're going to update and analyze your actual numbers. So for the 15 drivers, you want to update those on a monthly basis. And then you're going to create, based on those numbers, on a monthly basis, you're going to create a forecast. So if your goal for the year was to have 100 leads and you're a third of the way through the year and you've got 40 leads, your forecast then is like, well, I'm probably going to have 120 leads. As long as everything stays the same, you're going to create a forecast for the important numbers. Step 4, then you're going to update the score. After you have your target number and you have your updated forecast, you can update your scoreboard and compare number A to number B. Am I going to meet that target? Am I going to be close to meeting that target? Or is this a number that's really holding back my business and I'm not going to be close to meeting that target? So you're going to update your scoreboard. And then step 5, after you've updated your entire scoreboard, and you can see, it's color coordinated. Hey, here's where I'm in the red. Then you can create objectives around the areas. There might be 2, there might be 3, where your scoreboard is red and you're not going to meet your goals. You can create objectives around making changes so that next month that area can turn to green. And then step 6 is you're going to set the next steps, which is really what I showed in the action plan spreadsheet. Is after you've updated your score, you can create objectives and you can set next steps for the things that you need to change in order to move your business forward. So with the revenue drivers, the profit drivers, and the cash flow drivers, and these 6 steps, This really gives us our one clear path that we help business owners with, we help law firm owners with, to have a growing and more profitable business. And it results in, more revenue, more profit, and more take-home pay. So your takeaway today is that there is a predictable way to grow your profit and cash flow, and that this will enable you to make more money in less time with less stress. The most important part there is in less time. Profit and cash flow growth is inevitable when you understand how to move the right numbers. So like I said, we really help law firm owners, make more money in less time with less stress. So next steps for you is, get familiar with the driver's worksheet that we're going to be giving away for free by setting targets for this year and using, pre-populated data from last year, that you're going to put in of your own override last year's numbers with your numbers. So when you get the driver worksheet, it's going to have some pre-populated data in it just to show you as an example. You're going to want to override that with your numbers from last year. Then, set targets for this year, not just what do I want to make in revenue or how many cases do I want to have, but what do I want my profit to be? What do I want my ending cash flow to be? And then start tracking where you think you'll end up on the scoreboard. That's really important. Start keeping score so you know where you're winning and where you're not winning, where you're meeting your goals and where you're meeting your targets, and where you're falling a little bit short. And then if you want to work with our firm and you want us to help you do that each month, then we can definitely get on a right fit call and see if we would be a good fit to work together. I do know that we have a short waiting list. We're about a month out from getting anybody started, but we can start the process and we can, have our initial call to see if, we're a right fit to work together. But if not, definitely, hopefully use the driver worksheet that we're, giving away and we're handing out for free, and use it to, change your business and change your numbers, change your life for this year. So I'm going to welcome Eric back in and our participants as well. If anybody has any questions, that definitely covers the slides that I had for today. So if anybody has any questions, we can dive into that conversation.
Well, I've been on enough of these to know that sometimes people are timid to ask the first question. So I took some notes and have a couple questions. But I'll first off by start off with a statement, which I think is true for you and I. So you're coming at it from a financial standpoint. I'm coming at it from a marketing standpoint. This is not by no means a slight on attorneys, but most attorneys want to spend all of their time, working on cases and doing law. And I very, very rarely find out it's happening more and more often. But 15 years ago when I started marketing, almost no one had any marketing skills. It was put a yellow page ad up, once a year, and that was about all you could do. So I've noticed that as attorneys have come to the realization, like, wow, if we really got a handle on marketing, we're able to generate more cases, it would really take a lot off my plate, even though I have to pay for that service. Your service sounds very similar, where I assume one of the objections at first is, well, now I've got to pay this other expense. But I assume from your perspective, yes, you have to pay that expense, but you've got to look at what the output is on the other end, which is more profitability that more than justifies the cost.
Yeah, more profitability and more cash flow. So typically, with the law firm owners that we're working with, we do a lot of the analysis and getting all their numbers up to date for them. And typically, we only take an hour of their time a month on a webinar call just like this. And they leave that call with a one-page PDF scoreboard that shows them, hey, here are the exact numbers, here are the exact drivers where you didn't quite meet your target where you want to be. And also, the other simple one-pager is here's the action plan that we came up to fix that. So yeah, it's absolutely an investment to work with us. But as you're saying, the payoff in that is is that there's a lot less time the attorneys have to spend looking at and worrying about their finances. They really, leave that to us, and we also help them hit their goals, and we give them a clear path forward to hit their goals. And I always like to tell people that take a right fit call with me, that if I don't feel like I can help you, and I don't feel like I can help you grow and achieve the goals that you want to achieve, and then we're not going to be a good fit to work together. And we probably, wouldn't even move forward from there. I like to, my goal is for anybody that starts working with us is to get them a 200% return on their investment. And usually that's achieved just by helping them really meet their goals that they want to meet.
Now, let me ask you this. You had mentioned, maybe, is it one call a month? Is that approximately the touch points? And that's what I heard, if that's true for the lifetime of the relationship. And then what would you consider, and I know the answer to this is probably it depends, but what would be an ideal fit for you? Are you mostly working with solos who are at 500,000 in revenue, or you work with 4 partners that are at 2 million in revenue? What's kind of the wheelhouse for you?
Sure. Yeah. So for the most part, as far as like us meeting with the attorney, so to answer your first question, usually, like I said, that's usually just a 1 hour, one-time meeting a month. That's usually the touch point. Now, with a lot of the firms that we work with their in-house, bookkeepers and accountants, to make sure that their accounting department is flowing smoothly. Basically, what we don't do is we don't come in and make changes just to make changes, right? I know that there's some consultants out there that they kind of come in and they're like, you need to change this and this and this. And, if it doesn't really have an end result and it isn't really helping the process, we're not going to make that change, right? We're only making changes that are relevant and, are really producing results. So we do spend some time with bookkeepers and accountants, depending on, where their accounting department is. So there are some other touch points there. And how much we get involved with that really just depends on where they're at. And then as far as a sweet spot for our firm, we have worked with solos, like you said, earning around $400,000 in revenue, all the way up to multi-partner firms that are around $5 million in revenue. Now, obviously, there is some flexibility on both ends of that. That there are exceptions to every case, right? But for the most part, after, we help a law firm grow, to the point where they're more than $5 million in revenue, at that point, really they can afford a CFO in-house full time. And we try to help them make that transition. We try to help them, find the right candidate, make sure they have the right qualifications, and then also really do some training with that new hire as well. So that they're really jumping in and diving in, and they're not just starting from nothing. They get to see the work that we've been doing and putting together with the owner, in the past. So we really help, try to make sure that our owners and our clients have a really good transition when we get to that point. And if it does get to that point, and we've had a client work with us for that long, we're happy to do so. That's a good thing.
Great. So I've got a couple of questions that I'm curious about. One is we personally as a business work with criminal defense attorneys, family law, and we also work with contingency type of law firms like personal injury firms. Now, I'm wondering, kind of, do you have a different plan? Personal injury firm might have to put out hundreds of thousands, if not more, for their cases, hoping to get paid on the back end. Whereas criminal defense and family law, that's money up front, retainer type of a business. So I assume you have a couple different approaches for firms like that?
We do, yeah. And obviously, as you're alluding to there, the cash flows, I'll call it like swings or highs and lows in a, personal injury type, like I'm depending on a settlement, for my revenue, is much more volatile, much more extreme than, the more consistent criminal defense, family attorneys. And really, the attorneys out there, the law firms out there that are doing contingency and having those huge settlements, working with us can be even more beneficial and more crucial because we help them build up their reserve. We really, keep a good track on their numbers, and that's always really our end goal is, most of the clients that work with us, we're trying to get them at a minimum to where they have 4 to 6 months of cash in the bank to cover all of their expenses. So that literally if sales stop tomorrow, right, and you didn't bring anything else in the door, that their business would survive for the next 4 to 6 months and they would pay all their bills. That includes payroll and everything. That's really our goal. That's our strive to number to start out with. And then obviously, we just continue to, once we hit that 4 to 6 months, we just continue to maintain that and build on it. But because of the swings in cash flow with contingency firms, it can be even more beneficial for them to work with, a service like ours, because we're going to make sure that their reserves are built up enough when they do have those times that maybe a case takes longer than what they expected. For
Great.
Sure.
Well, I happen to know that you were a recent guest on the Legal Mastermind podcast. I'm not sure if that episode's come out yet, but where else can people find you if they want to find out more about you, get in contact with you? Sometimes people like to read up a little bit on you before they contact you. So what are some good spots?
Sure, absolutely. So probably one of the best first spots is LinkedIn. If you just go into Google and type in Ryan Kimler, I'm going to come up. That's going to be one of the first results that you're going to see is my LinkedIn page. They can also visit me at my website, www.financialclarityllc.com. And then I'm on Facebook as well. I have a Facebook business page. I have a Google My Business page, but really LinkedIn and my website are the best two places to go. And then, right there in that last slide, as I said, if you're looking to book a call with me, you can do so at oncehub.com/right fit. And that's really just an initial 20 or 30 minutes, me getting to know you and getting to know your business and really, what are the targets that you have set for yourself for, the next year and seeing, if I can, making sure that I can help you and, achieving those goals. And if we determine that we're a right fit to work together, one of the things that I also do is I do a free financial assessment, for anybody that is interested in working with us and we determine that it's a right fit. I do that for a couple of reasons. First is, obviously with my experience of working with other law firms, I can kind of point out like, hey, here's a metric where you're a little bit off from what I've seen. So it kind of highlights, the red flags, if you will, in a business before we even get started. So it's really valuable for the business owner or for the law firm owner. And then also for me and for my firm, it really, doing that financial assessment is really going to help me determine where you're at and, get some ideas right away of some areas that I can help you improve. So that's one of the things that our firm does for free. Like I said, it's a free financial assessment. So
great. Well, Ryan, I'd like to thank you on behalf of the audience for your time. We really appreciate the presentation. And for those that weren't able to join, this is being recorded and we're going to push this out on LinkedIn and several other properties so people will be able to see it. So thanks again. And we'll be seeing you soon.
Awesome. Yes. Thank you for having me today. I really appreciate it.